You might be wondering, how can I make the most of today's real estate market? And what about the increased interest rates? Let's get into it. Rising interest rates and inflation have caused many investors to step back from the real estate market due to fears regarding high prices and affordability. However, right now there's little competition among buyers, which means the ball is in the investor's court. During the last decade, especially in the past 2 years, developers experienced more demand than they had units to sell. This demand meant that developers could raise prices, and many investors hurried to buy a unit instead of spending time to make a well-thought-out decision. The situation is now in reverse. In 2022, the total number of new condo sales reached just over 21,000 units, a drop of 30% compared to the near record-breaking high of 31,000 units seen in 2021. Moreover, new condo sales in the GTA fell 68% annually in the second half of 2022. This stat is nearly identical to the lowest Q3-Q4 total of the past 20 years, which occurred during the 2008 financial crisis. The resale market is in a similar situation. According to the Toronto Regional Real Estate Board, the year-over-year condo unit sales dropped by 54% in Q4 2022 compared to the same period in 2021. This decline in sales can be attributed to the uneasiness many investors felt following the Bank of Canada's interest rate increases. But you, as a savvy investor, can recognize the value of investing when the majority do not. When 1,000 people are buying for the same unit, it's best to observe from a distance. And when nobody's pursuing that one property, that's the ideal time to act and make a purchase. In fact, the decline in sales is an excellent opportunity for investors. When you're buying a pre-construction condo in today's market, you can rest assured that you're getting the best prices and best incentives. Plus, without the bidding wars of the past, you're free to take your time to pick and choose the unit you want. Like all other companies, a developer must sell their product to make a profit. Active developers are more motivated to move on to their next project, which incentivizes them to sell their units quickly. That's why developers are currently offering attractive incentives to their clients, such as extended deposit structures. Rather than requiring a deposit of 15 to 20%, developers are now accepting as little as 10% or even 5%. In addition to the usual incentives, some developers are even waiving development charges and levies completely. As a bonus, certain developers are providing mortgage buy-down rate programs, also known as interest rate buy-downs or mortgage busters. These programs involve the developer helping investors counterbalance their high mortgage payments by offering a monthly cash back for a specific duration. For example, an investor could receive $1,000 monthly for 2 years upon occupancy or $2,500 monthly for a year. Warren Buffett once said, "Be fearful when others are greedy and greedy when others are fearful." Rather than postponing your next investment because you see the market has cooled, seize the fantastic opportunities and incentives available before others do. But what about interest rate hikes? Changes in interest rate should not impact your investment plans. Most Canadians pay off their mortgage over a period of 25 to 30 years, rather than 2 to 3 years. That being the case, you should be looking at average interest rate for those 25 to 30 years rather than stressing about rapid short-term changes in the rate. Sure, 3 of those 3 years can have high interest rates of 7 to 8%. But 5 or 6 years later, that rate could drop to 2 to 3%. Even though the interest rates may fluctuate, the mortgage rate evens out in the long run, which is what you should focus on when considering a mortgage. Canada's housing market has nothing but opportunity and growth ahead of it. I believe that the only way to look at life is to always look up. And that's what Canada is all about and doing. We're so lucky to live in this country, as Canada has always been geared towards progress. and that's why so many people immigrate here. According to Stats Canada, Canada's population growth rate from 2016 to 2021 was nearly double that of other G7 countries. Based on different projections, Canada's population is expected to reach about 43 million to 52 million by 2043, an increase to approximately 45 million to 74 million by 2068. A significant increase from 38 million people in 2021. To accommodate the projected population growth, the Ontario government has pledged to build 1.5 million homes within the next decade. Yet it is unlikely that the province will reach this goal due to the lack of time and skilled construction workers. Ontario builds significantly less than 100,000 homes a year. In 2021, the province built approximately 81,000 homes, followed by just over 71,000 homes in 2022. The imbalance between supply and demand will take a generation to fix, if not longer. It will likely take 5 years for the plan to come into effect, and then another 10 years to catch up to demand. In the meantime, the increased cost of constructions and the increased number of immigrants coming into Canada are keeping housing prices on the rise. Increasing housing costs reveal the stable and reliable returns that the real estate investments offer. Additionally, investing in pre-construction projects will be more profitable than purchasing resale units, as you can secure the first and lowest prices and benefit from the popularity of new properties over older ones. Furthermore, investing in pre-construction projects allows you to capitalize on future higher rental prices instead of today's rental rates. At GTA Homes, our team of Platinum agents is committed to providing our clients with valuable insights into the pre-construction condo market. We aim to help you create profitable income streams that will generate returns for many years to come. Thank you for watching another GTA Homes exclusive. Remember to subscribe and to visit us at gtahomes.com.